All right, so good day. So there's a new strategy I want to share with you guys. It's not new to me though, because I've been using this strategy for a while now. So I decided to share it with you guys so that you can become profitable like me. I call this strategy sets. The S means you have to study the market structure. You don't just jump into the market without studying the market structure. The E means your entry point. The T means target or your take profit. And the S means your stop loss. Okay, what do I mean by studying the market? Once you open your charts, the first thing you need to do is to study the market structure. Maybe by first of all going to the weekly time frame. Once you get to the weekly time frame, you got to know what is the overall trend of this market. Now currently we're on the weekly time frame, right? So, and our overall trend from this moment is the upward trend. Maybe you can just use your trend line to check this. So you can see that the overall trend here is the upward trend, right? So let's go to a lower time frame. Let's go to the daily time frame and see what's happening there. Okay, the daily time frames now is also an upward trend. You can see that the overall trend is still an upward trend, right? Then also you go to a lower time frame. Being a day trader and not a swing trader, you want to trade in a lower time frame, right? So you go to a lower time frame and see what is happening in this lower time frame. Okay, you're on 4-hour time frame. The 4-hour time frame, you will see that yes, the overall market is still upward trend, because if you notice from this moment, all the candlesticks are above the 200 EMA. This is a 200 EMA. The yellow line you can see is a 200 EMA. And when you draw your trend line, the market is still above the 200 EMA. So it is an overall upward trend. The overall trend is still an upward trend on the 4-hour time frame. So let's go to the 1-hour time frame and see. Okay, on the 1-hour time frame, you can see that the market broke through your 200 EMA. You can see that the market broke through your 200 EMA, right? So now we want to look for an entry point. We need to look for an entry point. Maybe you have to either draw a trend line, or you wait for the market to break through your trend line or break through the 200 EMA before you enter the market after a retest. You don't just enter into the market immediately. You have to wait for a retest before you enter the market. So now we've gotten our market structure, which is the S. Now we are looking for the E, right, which is the entry point, right? So now we wait for this market to either break through our trend line or break through the 200 EMA, because we find out that the overall market is bullish, not bearish. It is upward trend. So you have to maybe follow the trend also, since we are retail traders. So all the opportunity we'll be looking for is buy, not sell, right? So now we are waiting for this market to go back to the buy side. Only professional traders we trade the sell market, because they are professionals, you understand. But as a beginner, I advise you not to enter any sell in this market. Just wait for the market to go back to the buy, because the overall trend, as we check from the weekly time frame, is buy. So you wait for this market to break your trend line or your 200 EMA, then have a retest before you enter for this market. Let's see how it goes. So we are patiently waiting for this market. So you see, the market just broke our 200 EMA and our trend line, right? So now we'll be waiting for a retest. Let me just draw a trend line from the breakouts, right? So I'll be waiting for a retest. Once I get a retest on the 200 EMA or the trend line, I will immediately enter the market. So we are waiting for a retest. So can you see that there's a retest? You see that there's a retest. It touches our 200 EMA. So now you have an entry point. So I'll just pull out, because after this retest, immediately I will enter for a buy here, because look at this long candlestick, bullish candlestick, which shows that this market is definitely going up, because the major trend is an upward trend, right? So you can see, let's say you want to take something like this, which is very, very okay. If, for example, you want to even take 1:5 or 6, you would have gotten your money by now. So let's see how the market plays out. Don't forget your stop loss. Don't forget your stop loss. Your stop loss will always be below the most recent lows, which is this, right? The most recent lows after the candlestick that broke out will be your stop loss. So you can see. Let's see how the market plays out. Let me just shift this. More and see. Depending on the amount, on the money you want to take out. Okay, you can see. You see? And this is it. As easy as this. Very simple. You have your entry point. You study. The first thing you do is to study the market. You have your entry point, which the studying the market is the S. The entry point is the E. Then I said what? T, which is your take profit, which is this, and your stop loss, which is this. Set. As easy as this, you have made a huge amount of money for the day. All right, thank you very much. Kindly like, share our video for more, and subscribe to our channel. Thank you and bye.